Okay, let's go ahead and get into the stock market technical analysis. We'll look at the broad markets, some individual trade ideas. I had a subscriber ask me to look at some of the long trade ideas that I've posted recently, and then we'll wrap up. So if you guys are finding value, please drop me a thumbs up. I do appreciate it. It helps the channel grow. And finally, if you're interested in getting additional trade insights, additional videos, additional charting, trade setups, private member group, check it out. Link in the description below. It's $5 a month. You can cancel anytime, so there's really no commitment. And I did put out a private member video yesterday on the market price action. So check it out. Link in the description below. All right, we'll start off with tech sector, triple Qs. This is what I've got. And I'm going to kind of just go quickly through this stuff because not a lot's changed. But in general, bearish rising wedge. We have the bottom or support line of the wedge is right here. Yesterday, the market, we closed pretty much right there on support. Okay, and today, they popped this thing up. If you look, intraday, or like we opened in the morning. Let me go to the hourly chart here. In the morning, we kind of were running higher. We were up here, but then ultimately we've been getting sold into, and you can see right there, they've been trying to hold it. Boom, there's a rejection. They back tested it. It's been getting rejected. So I think it's going to go back to the hourly real quick. I want to show you this. One thing you could wait for, you can see they've been trying to hold this level 415. It's about 415.30. They've held that level all day. So a definitive break of that on the hourly chart, you get an hourly close below that. That would be, I would consider that a sell signal, because if that happens, and as long as they hold that through the day, that will give you a kind of a jump start on the short. And then if you get the daily close obviously below, then it is, a definitive sell signal. And that basically the widest part of the wedge would be the measured target for what we have going on. If we break, and right now we're below that. So that sends us down to 462 and probably the 200-day. So I'd target the 200-day just because it comes in a little bit closer. I wouldn't hold out, you'll likely get a bounce of that 200-day. So that's it. We're really, really close to a sell signal on the triple Qs for a push down to the 200-day, which is about an 8.5%, 9% drop from where we're at right now. Nvidia being kind of the major player, but Nvidia broke trend. All right, we've broken trend a couple days ago. There's your uptrend line on the daily chart going all the way back to October of 2022. And we broke trend, really, definitively broke trend back here on last Friday, so a week ago. And we've been heading lower since. So trend is broken. I think it's very good odds that we head down to the 200-day and this support level about 117.40. Okay, that would be the target. Whether there's a potential downtrend line. But again, I wouldn't hold out for that because this thing broke trend. It's a major trend. This is a crowded trade. There's a little bit of dip buying today, but I think the selling will increase. The rate of selling should increase, given that it's a very crowded trade. The more you go down, the more and more people are going to look to exit. And there's a lot of people that are long this thing. So again, I think you probably could have a pretty swift move down to the 200, probably get a bounce there, reactive bounce, because ultimately this is a big trend, and this trend is signaling, and especially this big divergence, it's been building for a while. This is signaling a lot more than just a move down to the 200. I think that's probably just the first key reaction level. So we go like this, hit the 200, you probably get a bounce, could back test, I doubt it, but you could, and then down, and then we go lower from there, But of course, each level is, a point of action, because I'm highlighting a potential path, but there's no guarantee. So the way you mitigate risk is if we head down to the 200 and you're shorting, you cover your short, okay? And then if it bounce, you could go long either. It's objective to go long. And then you bounce, okay? And then maybe you get out of your long at resistance, go short again, head back down to support. Now at that point, you've already hit it once, so you might get a little minor bounce, but less of a chance that you're going to hold, and then I think you break and head down to the next level of support. Then you cover your short down there. Okay, so that's how that works. So that's that one. Tesla trade setup, not the best setup actually, but look at the hourly chart. You've got an uptrend line here on the hourly don't have divergence really on the hourly, so there might be another thrust higher in Tesla. It has not broken support, no sell signal, no real divergence, so we'll move on from that one. Meta looks decent. Meta is, again, broke trend yesterday, just an inside day today, and it's looking weak, so I think there's more selling to come. Should be heading down to 563, but the major target of this big wedge it put in is all the way down here at 370. All right, so I do expect us to head down to much lower prices in Tesla ultimately, or sorry, in Meta. That's 40% down there. This level right here is about 33% drop, so somewhere in there for that one. Interest rates, 10-year Treasury, probably the most important chart indicating where the market's likely heading in the future. We have a breakout in interest rates. We got that breakout yesterday. So there's your downtrend line resistance, and there is your breakout. Boom. You broke out yesterday, today higher. So as rates rise, it puts pressure on interest rate sensitive stocks. In general, it puts rates on pressure on the entire market, because the entire market has been predicated on the levels that have been predicated on cheap and easy money. All right, and that's been in play for really 20 years, a little bit more since the Great Recession. I guess not quite 20 years, but they started dropping them after the dot-com bust. Greenspan started to do that. So cheap and easy money, dropping interest rates have been the status quo. But if you look at the interest rates, if I go to the weekly, this is your 10-year Treasury. All right, and this goes back to 1981. I don't show this all the time, but if you've been with the channel, you've seen me go through this. There is a nice clean downtrend. That's falling interest rates. And that's 1981. All right, so that's more than 40 years worth of time. For the most part, really everybody alive today, for the most part, has only experienced falling interest rates. For the most part, I mean, except for maybe really elderly, but baby boomers, they basically they were in their teens and stuff, maybe early 20s in the 70s when the rates were rising, but they weren't most likely investing a bunch of money when they were in their 20s. Most people don't have a ton of money to invest in their 20s, so they came into money and have been investing in a falling interest rate environment for their entire investing lifetime, which goes to say this is why financial planners will tell you that time in the market beats timing the market. And yes, that is, in general, it is true, because typically you have a falling dollar over time. The Fed continues to inflate the value of the dollar. So as the dollar loses purchasing power over time, stocks go up over time, but it's a little bit skewed from for basically everybody alive today, because we've had a falling interest rate environment, which has helped prop up stocks and real estate, really all asset prices for the most part. And that's changed. And what you've got the reason why we've spiked down here, that's QE. That's the Fed doing QE back in 2008. They did like 1, 2, they did an Operation Twist. And then this is COVID. So each one of these spikes outside of this downward channel is Fed intervention. And then you can see what's going on. We are well outside of the channel. So we're in a rising interest rate environment. To me, this looks like a big bull flag where we're kind of rising up, flagging out, and we're going to rise again and, spike. So yeah, that's what we're in, a rising rate environment, which should, over time, this is longer term stuff. I'm looking at back 40, 50 years. Over time, the markets should continue to see pressure. All right. So, if you want to go against this trend, I know a lot of bulls, they say don't fight the trend, but the trend, as far as I can see, and I just showed you, the longer term trend in interest rates looks to be rising. All right. And if you want to be going long stocks over the long haul, because I get a lot of trolls that basically say just buy and hold and you'll be good. Well, if you want to do that in a rising rate environment, be my luck. I think it's very unlikely you're going to see stocks really perform very well over the long run in a rising rate environment. So you basically just have to assume that you're going to see falling rates. The Fed's trying to drop rates. They're dropping the Fed funds rates, but the long-term bonds are going up. All right. Fed started cutting rates back in September, and the long bonds. This is when the Fed said, we're going to do a 50 basis point cut. They did it there, and the long bond gapped up, and it's been up and up. So rising rate environment. All right. That's what's going on. It's not my opinion. It's objective. All right, so let's move on. FITB hit our first profit target yesterday on the big drop. This one, again, this wedge, the projected target is way down here, down at 34. Little gap to fill right here. We're slightly below it, but, it doesn't look super impulsive. So I think you're going to get a bounce here, and that bounce would likely get sold into. So we might just drop right through it, but the market's kind of holding up today. It's not really dropping quite yet. So otherwise, if we do slice and just hold right, just reject right through this level, then should go right down to the 200-day moving average, get a bounce there, and then the projected target's way down here. So 34 is the final target. So yeah, that's what I'm thinking. S&P 500. I think most of the market, this is one thing, the entire market's predicated on the tech stocks. It's just, you basically look at Apple and Nvidia and you basically can know where the whole market's going. But here's an example. You look at the recent price action. So here's the S&P 500, and we were grinding higher, all right, day in and day out, really low volume, just grinding higher on the S&P. But if you look at the equal weighted S&P RSP, we were going down, all right? So most stocks were going down, and the heavily weighted select few were going up. That masks the strength, all right? That basically says the breadth is really deteriorating, and boom, you get a big drop there. And so if you saw that before, then you could anticipate this big drop here. This big move yesterday wiped out gains that went back basically 2 months worth of gains, wiped out in a single day. So all the trolls that were trolling me for the last 2 months, leaving comments about the market only going up and I was completely wrong and this and that. I mean, I'm not saying that I've been right, saying the market's going to go down all the time. I haven't obviously got every call right. But I got the last 2 months right, so I think you need to retract at least the last couple months worth of comments. But yeah, I mean, obviously, that doesn't mean that we're not going to go up from here, okay? There's key levels to watch. Again, I pulled my shorts in any meaningful way back when we hit, let me go to the Qs because that's what I trade. Back when we hit these lows, right, I think it was in August, I'm pretty sure. Maybe right there. Oh, no, actually right there. Sorry, August 5th. Yeah, go back and watch the August 5th video. You'll see that I talked about how we basically were shorting this drop, but then I flipped and I actually went long the morning of August 5th right there. And I haven't really been short in any meaningful way, calling for the next strong leg down until we break this bearish rising wedge. I've just been talking about the fact that we're in a wedge. It's likely going to break down soon because we're in divergence, but I have to wait for the breakdown, and I'm still waiting, all right? Even right today, even after yesterday, we're still within the wedge. So, I think there was signs that getting short on certain stocks, individual stocks, or this to me still looked like a stop rate because the bearish rising wedge, we popped to the upside right ahead of the Fed, just screamed of a stop rate. So I figured that we'd probably get a big drop. So I caught that. But a big swing trade, a big meaningful downside trade, I can't quite call it yet because I've got to break this support. I need to see the sell signal. Once we get it, again, I think we're going to flush relatively quickly down to the 200 and down to these lower levels. Okay, what else? We want to look at some of these longs. Let's look at some of these longs. SMG. So again, longs aren't my favorite when I'm seeing signs that the market's about to break down. So understand that. These were objective longs while the market was holding up. Here's SMG. You've got support, 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 support. and you have a break of support right there. So until this is not an objective long. When you break support, it's a stop. You want to stop out. You can buy it at support with a stop below. And, so if you're buying here at support, that's fine. It's an objective long, but you would definitely want to have a stop below. And this should have been stopped out really yesterday. So not a long anymore because it's been stopped out. Now, if they recover the trend line, then you could have could be a false breakdown. And then that should, be pretty bullish. But until you see that, there's no trade here. It's a stop. MOS, this one has been bullish. It's been doing a bullish falling wedge. That bullish falling wedge is actually still intact. This is a divergent low. So this one still looks okay from a longer term setup. Ideally though, with the market where it's at, I probably wouldn't be buying this divergent low. I'd probably be more interested in waiting for a break out of the resistance line. You can buy at support or you can buy on a break of resistance. From this perspective, probably be waiting for that. I don't want to short this. It's got bullish divergence. It's got a bullish falling wedge. It's not a short, but it's not a long either. It's really just a wait and see. It's kind of a setup still. Maybe if it recovers. This trend line is not my favorite because we've had some violations of it. So this trend line right here is a lot more objective, a breakout of that trend line. This one, NTR, looks about the same as MOS. It's a divergent low. This is a divergent low. You can see momentum's dropping, but we still have relatively bullish momentum. It's pointed down though, so you definitely would want to see it turn up. If you keep going lower, you're going to burn through the divergence. But as of right now, it's divergent low. And then you have a potential trend line. I've got it marked in blue right here. There's a reaction there. There's the highs. So break out of that could be the next buy signal. It kept getting rejected at the 200. You hit the 200, you're likely going to get rejected. You can see rejected once, rejected twice, rejected 3 times. So you really need to come up here, take out this trend line, take out the 200, and that is the most objective long-term buy signal. MPWR, this is a semiconductor still at support, still holding support. So this is an objective long. If you're interested, you can see there is an uptrend line right there, a big long uptrend line. Big negative divergence though. It's coming off that big divergent high. You did see a decent drop from way up here. It dropped 40% and you're at kind of long-term support down here. So that one's objective to go long. If you want to be bullish on it, I think it's objective to go long. However, if the market's going to break down and you're going to see triple Q start to break down, then you're likely going to break this long-term support. Okay, so for that, you'd want to look at the weekly chart for longer term kind of chart analysis. On the weekly, you can see big, negative divergence has been building on this for a long time. All right, you've got negative momentum. So again, to me at this point on this weekly, given where the market's at, I'm not interested in being long. This to me looks like a bear flag. Down, and this is the weekly chart. Down, you flag out, and then you continue impulsively lower. All right, something like that. And that would set us up for a push down to the measure target of that is like right there. It's about 394. And if that happens, you're going to be breaking long-term uptrend line support, which means you've basically started a bear market, most likely, or a sideways market, but not higher. So I think this, I'm not going long on this one. And the reason why is the posture of the broad market, especially those tech stocks. They'll likely drag this thing down too. Intel, this is a weekly chart, but let me drop down to the daily. Intel, you have, you've got slight divergence. It's not great. I mean, in general, this is a semiconductor. It's indexed to the semiconductors. Nvidia's in there. Nvidia's indexed across the board. So they all kind of trade together due to this indexing. When you get broad market moves, broad market directional moves in the SPY and the triple Qs, everything kind of moves together. So when you get the sideways chop or kind of the grinding action, you can really pick individual stocks. But broad market moves, you're going to see just everything flush out. So I would assume this does the same thing. I mean, I definitely wouldn't want to be long this, although this doesn't look like the best short either. This has already kind of taken a real beating, so not something I'm interested in shorting. It's the momentum. It's a divergent low right now, so I think it's going to go a little lower, but it's probably going to put in a divergent low where the momentum looks like that. You dip down, have a big spike down. Could be a buying opportunity down there. Okay, that's all I got for the video. So I'm looking for more downside. We just need to see those sell signals, those breaks of support on really triple Qs. I've pointed out the key level. If you guys are finding value on your way out, drop me a thumbs up. I'll catch you on the next one.